Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on ospreystrategic.org as well as StockCharts.com. So, is the commercial real estate division next? And I only put that out there because some of the charts are so weak. But what I wanted to do, rather than just kind of highlight the industry and where it might be in this bigger picture, was show you how you could go quickly look and get set up for that kind of thing to watch and see if it does transpire, and just be aware if the problem's going to start cracking in other places in the market. So the market's trying to start another rally after we had the bank failures last week. They're focused on large caps so far. Really, the money's trying to hold the indexes up, and underneath the surface it looks a lot weaker. But could commercial REITs be under pressure next? And I think those are the things we'd like to talk about. If you like the way I look at the market, feel free to head over to Osprey Strategic. And for just $7, you could check out everything we offer there for a whole month. So let's jump into the chart. So what I've done is I've shown just a few. This is residential REITs. And what you can see is the scooter rankings are all below 50. So they're kind of low. And the problem we have here is, can we get these charts to start to improve? So if we just hovered over them, you can see that one doesn't look too bad, but that's the best in the group. We get down here to Camden Property Trust, and it's pounding the door on new 52-week lows, Essex Property Trust. So you get the idea. There's quite a few of these that are hurting, and obviously the investors inside are thinking the same thing. So this is a relatively large part of the market. You can see a lot of these are large cap stocks. So this is just one area. Again, I'm over here in residential REITs, and I could go down into different types of REITs, let's say industrial office REITs, that kind of thing, so that we could check them all out. Now, if we were just wanting to go check the status of the real estate in general, how would we do that? So let me walk you through that first. We'll take a look at these commercial charts, and then if we get time, we'll do a little bit more index analysis. But in here, there's an area down at the bottom. So I've started a new scan. This is just from from your dashboard page. You go up here and you hit new. And so you grab this scan. And then down here, you're just going to go and choose sectors and industries. We're going to go all the way down here to the real estate sector. And if I click here, that'll give me all of the components of all of the different ones. So we could add it in here and then just run our scan. So type is a stock, daily, simple moving average for over 20 days, volume is greater than 40,000 shares. So, and some of these REITs actually do trade a little light. This one's 88,000 as an example. So, so anyway, it's going to get the vast majority of them, I think. But what we want to do now is, if we went by industry group and just sorted, you'll see that I've got all the different types of groups in here. Now, what we can do is we can sort to get the scooter ranking first. So we'll put the best scooter rankings first, and then we'll put the best industry. What that should do is give us the best scooter ranking and within an industry, and then when we change industries, go back to the best scooter ranking within the industry, and that'll give you a feel for it. So we want to save this to a chart list. So if you haven't already create one, you could just say save to chart list. I've already got one that I'm just going to replace lists. So I'm going to go in here and I'm going to grab this one called Scanning Stampede that I cleaned out just before I did this. Okay, so we want to preserve the sort order and we want to save it to a list. So once we have that sort order there, now what we can do is we can go quickly take a look at CandleGlance view. And on CandleGlance view, these charts are set up as weekly. Obviously, they're too fine, so let me just zoom in a little bit here. But what we're looking for is, we want to know if all of a sudden these charts are going to start breaking this uptrend line. So in this case, you still got an uptrend line. In this case, you had an uptrend line, but it's starting to crack. Now, you'll notice that this scooter ranking for this one is still holding up strong. This one's around 70%. This one's around 70%. So these are some of the better ones. And again, we sorted best to worst. So within each REIT segment, so industrial and office would be different than the others. But when we quickly look through here, it doesn't take very long before the charts are all starting to break down below their 20-day moving average. They've all started to drop here. And you see some of these like literally plummeting in the last few days. So this can be a meaningful place to just go see how much support there is there, and did they rally after Monday, Tuesday. And so this is an important way to just kind of keep track of what's going on the industry. So whether or not some goof on TV says, everything's in good shape now, we had somebody buy their shares. That is literally like one of the hardest ways to look at the market. We have to go look at the charts and see what investors are doing with their money. And so on the Zoom panel here, you can see, is there any real rally in some of these? And this one, early February was at $30. It's under 20, so that's a 30% haircut in a few days. Here's Crown Castle trying to get back above its 20-day moving average. And here's Cousins Properties. This one fell hard. Again, are they going to recover? That's a really good question. Looking at this Ryman Hospitality, at least it had an uptrend going, but I think what you want to broadly look at is make sure that these charts don't start to make new lower lows. And again, I'm looking through, just going through by area, and you can see we're starting to get into hotels, and these ones, they were okay. They were part of the travel group in early February and doing quite nicely. But you can see they've all started to migrate, making lower lows. And lower lows is not exactly an optimistic view of the world. So that starts to put into question the uptrends we had since the beginning of October. These things that are starting to break down quite hard. Again, one of their main issues is going to be, first of all, if they have to refinance, what's the interest rate on a refinance? And second of all, just if you're seeing a reduction in real estate, then these areas are going to be hard pressed. And when you think about doing a new development, it's got to be at a higher interest rate, roughly 7% or more, maybe even up to 10%. So any new projects are going to be stalled, but the real question is, will that help hold these old ones up, or will these companies have trouble growing, and so that'll rotate the stock down? Anyway, looking at the hotels, I'm not seeing a whole bunch of charts here that make me want to get out of bed and start to hit the buy button on here. So that's a problem. And when we look at this, these are residential REITs I think we're getting into here. And you could just see they're starting to tilt down, but they don't look as bad as some of the other ones. Here's Postal Realty breaking down. So when I look at the charts, these ones don't look quite as sad, but the significance, like here's one over here. This one dropped literally from $8 to $6.50. 20% in 3 days. That's a meaningful haircut, especially when you were there for the dividend. And, in this case, it's wiped out pretty much all of the work of last year going, this is, call it July. So we're 8 months on the chart, but I think we all remember that the charts in general were getting lower towards the middle and later quarter of the year. So here's Bright Spirit, hit new 52-week lows. I'm not seeing anything that really, even the best ones don't really look that great. What would make it look better is, just as an example, here's a chart of a winner. If we put these two charts side by side, here's NVIDIA, and it's tucked right up against its highs and hasn't really broken down much. AMD actually on Tuesday made a higher high, pulled back, and it looks like it wants to try to make another run for the roses. So these charts at least look stronger. And now the real question is, we've had a couple of day rally. Can they hold it up until the weekend? But, you're looking at one sector. It held up, when you look at this price action here, this was pretty solid. So I like what I'm seeing there. Okay, anyway, to give you that sort of tone about the charts, I think is pretty important. So let's go back into here and check out these CandleGlance charts. Again, the purpose of doing this is just to quickly analyze an industry or a sector and see what's going on. But look at these office REITs. These things were $10 at 60, so that's 40% haircut, $7 to $5, and they closed on their lows on Tuesday, so they didn't participate at all in the rally. And that's probably something to keep in mind. If all of a sudden, whatever, these office REITs, and again, we're looking at the best in the group here near the top, as they're starting to break down, these things are just diving into the floor. So are we going to start to see a whole suite of these companies have trouble getting financing, or how is this going to resolve? If we look at what happened in those bank stocks, they had a very volatile dip and they're trying to bounce. And again, they got some pretty solid government assurances. I think what we're looking at here is these charts continue to dive. So all of a sudden, if we start to register a whole bunch of real estate bankruptcies or foreclosures, or how does that look? So we need to be very astute here and understand the risk if all of a sudden the property market's going to start to be damaged. And when I look at these charts, they didn't recover at all, even after the Fed kind of coming in to help on the bank side. So does that mean all of these real estate properties just start to slide? And what happens with your loan covenants is based on your share price. Everything's fine, but if your share price starts to drop too much, then your loan covenant changes, and you can put the loan into a state of recall. So what we're watching for here is how do these stocks get defended? And currently they don't. So here's one down 4% on, after a drop on Friday, a little drop on Monday, a bigger drop on Tuesday. Doesn't look like they're going to get defended, and that's one of the reasons for me to kind of bring this up today, was that we need to make sure that if all of a sudden we're going to start seeing broad threats, especially to a large dividend paying group, and people are sitting in those stocks for the dividend, and you watch on Twitter all these people, I'm looking for a pullback to buy a dividend, and I'm thinking, if you lose 30% on the stock while you're holding it, waiting for a 3% dividend or a 5% dividend, you haven't really made a lot of money. And so these are real problem areas that we need to be aware of. Now, again, just as we continue to work through this here, what you're seeing, these scooter rankings are giving you some idea how the stock is behaving relative to the peers across the different size groups. So again, the scooter ranking is ranked into large cap, mid cap, small cap, and then there's a whole group for ETF. But what I wanted to point out here is even with respect to their size, it doesn't really matter. We're starting to see, a lot of these big ones break. And here's like Arlington Asset, right? This is a $2, $3 one, and it's starting to turn down. I don't get the hope that somebody's going to come to the rescue and start to buy all these on the dip. So as we start to see the credit problem widen out, not just from banks, but from bank customers, this is where I think the next shoe could drop in terms of credit. So one of the reasons that we're seeing the money move this week back into large cap tech like semiconductors or Apple or Microsoft or whatever, is they have huge balance sheets. But let me give you an example. Taiwan Semiconductor, sitting out in the middle of the desert in Arizona, has, this is its chart. It's okay on a hourly basis. So this is the chart in general. But they're building a $12 billion or $20 billion project. There's a couple of semiconductor plants going up in Arizona. My main point would be, did they finance the whole thing and get it covered all the way through to the end? Or are they looking at their costs doubling and tripling to finance this thing as they build it out? Because it's about half, I guess would be half through the construction. So all of these things make for a bigger question to me, as these companies have to kind of pay that out in order to keep finishing their plan. So, here I would draw a trend line up, and we've broken it. Now I draw a little more gradual trend line from here to here. But if we start to see these start to turn down as their large capital investments are going to come in at much higher interest rates, I think that's where we start to see the next leg down. So again, even though people are hiding over in that area, after the destruction we saw in the mid-cap banks, I think, it's pretty important to realize the change in the cost of money is huge, and for all these companies that have big projects, especially the semiconductor area, all trying to put new projects in America, and trying to finance those. I know they got some government assistance, but if all of a sudden you take your capital cost and triple it, that's a pretty big deal. So anyway, keep an eye on these charts. I think this REIT area, and I've shown you how to go get it. There's quite a few charts in here. I'm scrolling through, but I'm not seeing a whole bunch of these down here in the bottom that look like they're going to get rescued anytime soon. And so does that make you want to start to buy all these dips down here? I think it's not one company that's falling. It's the whole industry group or the sector is really starting to break down. So that's one of the reasons I thought we should prepare or talk about that this week. Now, a few weeks ago, I did home builders, and so those charts still look fine. And my main point on them, and I'll just pick Hovnanian and Toll to grab a couple. The charts are still wandering here. They dipped a little bit towards the end of last week. This is what they look like on the daily chart. Now, to me, they're still holding, but what I don't want to see is these uptrends in relative strength start to fail. So let me just shrink my screen down here and get it normal. Go here and annotate. But what we don't want to see is this relative strength line, like this one, starting to fail. It's starting to fail, so it just means caution. But my point would be, we've got a trend line here. That's kind of our low slope. Then we've got a trend line here that just broke, and that's kind of what broke with the relative strength. So we have a little bit more room to fall, but do you want to wait for these things to come all the way back to where they were in October and November? That's a great question. So on Tuesday, again, this stock gapped up higher, opened, tested the 20-day moving average, closed below it where it opened, which isn't a great sign. Basically, after a day of discussion, the stock couldn't keep up where it gapped up to, and it's trying to hold roughly in the range of Friday, Monday. But all of a sudden, if this starts to make a lower low here, I would expect that this, as an example, stock starts to get sold. Even if it's just a little bit, I wouldn't want to be kind of hanging on just when we look and see what's going on in the rest of the area. So again, if we go to Toll Brothers, that one isn't cracking its relative strength line as much. I don't know if that's fair to say, but we could have a line here. We could draw a line more like this. Like this. Grab it and put it under there, and then hopefully, if it can continue to maintain its outperformance trend. But if it starts to break down more, and again, it tested the 50, now it's testing the 20. I think the end of this week is a pretty important test. All of a sudden, if these home builders start to make, you have a low here, a lower high here. If you start to make a lower low here, that's probably not what you're looking for in light of what's going on in the commercial real estate and the residential real estate REITs, and then what's going on in the banks. So these are all areas that I think are going to come to the fore over the next couple of weeks. And maybe I'm wrong. That would be good news. But try to make sure that you're aware of the overall trend here. When we look at what happened back in 2006, 2007, some of the home builders started to get into trouble, but there were other signs. I mean, I think there was a hairdresser in New York that owned 5 houses, and she was renting them out. And we've kind of got that model going with Airbnb a little bit here, where people think they could just have these rental properties all over and manage them through Airbnb and, keep their day job somewhere else. And there's a lot here that all of a sudden pressure from high interest rates could start to come calling on these people. So that would be one thing that I really want to maintain a level head about and not get too bullish. Oh, they're still holding up. Now we can also go look at Home Depot and lows. And what we want to see here on these charts are bouncing around, but they are making lower lows, so that wasn't real great. And when you look at them here, again, they've been underperforming in relative strength. It wasn't too long ago that the CEO of Home Depot was on, and her comment was that, well, if people don't move up to a new house, they'll renovate their old. Well, you can see the chart was 340. It's dropped to 285. It's not a huge drop, but it's about $60 or 20% since the beginning of February. And I don't see any real relief rally trying to start down here, unlike Tesla or Apple or something like that. So when we look at the monthly picture, the weekly picture, the weekly chart, these things are already on a red. The full stochastics is low. They've dipped below zero on their PPO again already. And so drawing a trend line for me, this is kind of an important one. I don't want to see that break. Well, I think you and I would both say it's breaking. You can just see the tip of it starting down here this week. Now, maybe it holds, but you've also got this bigger picture, what we would call like a multi-year head and shoulders top. And we saw this in Boeing a few years ago, but you get this left shoulder head and now the construction of the right shoulder. You're not getting the enthusiasm for the volume. This thing continually has a decreasing volume line here. So it doesn't look like it's improving to me. And the other side of it, again, we're starting to break the relative strength uptrend. The scooter ranking is starting to get weak. So I don't usually use a trend line on the scooter ranking, but again, you're down here around 30%. So that means 70% of the stocks are better than this particular one. So when you look at these at the sector, I think it's pretty important to keep a clear head on how these stocks as a group are behaving, and don't get sucked into the story of one or two of them just because they might have had a good day over the week. So that's kind of where I'm leaning to, that I think this credit problem starts to leak into some of the commercial real estate, and that could cause us to put more weakness on this side of it. Between now and next week, obviously, we're going to have a lot of discussion about where the Fed's going to come out on this whole thing. In Europe, when they started to have some trouble with the British pension funds or whatever, all of a sudden that caused them to pause. But we're sitting here with still very high inflation, and we've got a situation where the Fed kind of feels like, or maybe it's the FDIC feels like they fixed the bank problem for now. And so if the Fed had to keep raising their interest rates to keep this inflation from getting away on them, that's where we're really going to see the rubber hit the road if the market doesn't like the way the Fed's going to continue to try and pursue this crushing of inflation. I would just say, if you get a Home Depot number below 275 or maybe 265 over the next week or two, that's probably telling us enough that we need to be more careful as to where this overall commercial real estate market is going. And again, Home Depot is just one of the charts. But I hope I've presented a case, first of all, showing you how to just go get the charts very quickly, put them in a group, scan them using CandleGlance, or go through them one at a time. And again, we didn't do the one at a time part, but that's a pretty easy thing to do, right? So if I just update this and go grab any one of these charts, what you're looking for is what is the trend on the chart. Now this one has a scooter ranking that's actually rising up, so it's a healthcare trust. It's a little bit different. Now if we go down to whatever, just some individual stock by itself, grab it, and you can just see it's trying to hold the 200-day moving average. Those were support on the way up, resistance on the way down. So here's the question mark. Can it hold here, or does it break down? And so I would just say you're at a real critical crosshairs, because you've also got an uptrend line off the lows. It broke it a little bit. Now it tried to get back above it on Tuesday. All of these things are just literally the market trying to figure out where we're going to go next. And with that, I would say that a good dose of cash in the portfolio would help. And if you're afraid of cash, then just put it into a bond or something that keeps you on the safe side for now. So again, if there's any questions you have about how we do things at Osprey Strategic, we've been trying to keep our customers safe since the beginning of February. We briefly tried to catch the rally at the beginning of March. It failed almost within a day, so we were out. But the idea here is try to make sure that capital is protected. I think if we learned anything, you get a tweet from Silicon Valley Bank saying, they've just been rated one of the top banks in America, and 4 days later they're bankrupt. So it's that kind of sudden change in the credit markets that can really cause things to go awry. Thank you for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern Time. You can also see the recording on StockCharts TV YouTube page. Thanks, everybody. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.